The current live price for PAVmed Inc., trading under the ticker symbol PAVM on the Nasdaq, is exactly 21.06 USD, marking an explosive intraday surge of $14.88 or 240.31% today. This isn't just a minor technical breakout or a low-volume move. We are seeing a total re-rating of the company's market value in real time. If you have been watching the tape this morning, you know that this kind of velocity is rare even in the high-stakes world of medical technology. While the broader markets might be focused on the daily fluctuations of Tesla stock or searching for the next leg up in Apple stock, the action under the surface in small-cap med tech is where the real volatility is living right now. To understand why PAVmed is currently tearing through resistance levels, we have to look past the surface-level charts that most people see on their Fidelity mobile app or through a quick glance at Robinhood investments. The expectation from the general market for months was that PAVmed was a company struggling with Nasdaq compliance, battling against a share price that had lingered in the pennies for far too long. In fact, many retail investors using investing sites for their research had written this off as a delisting candidate. The reality, however, is that today's massive move is the culmination of a strategic contract win that changes the entire revenue trajectory for the company's most important subsidiary, Lucid Diagnostics. Early this morning, it was confirmed that Lucid Diagnostics has been awarded a contract by the U.S. Department of Veterans Affairs for its EsoGuard esophageal DNA test. When you consider that the VA is the largest integrated healthcare system in the United States, serving over 9 million veterans, you start to see why the market is reacting with such force. This isn't just a pilot program or a small regional trial, it is a national procurement framework. For a company that was previously fighting for every dollar of reimbursement, having a pre-negotiated price that matches Medicare rates across the entire VA system is a massive fundamental shift. This is the curiosity loop that most traders missed. While everyone was focused on the 1-for-30 reverse stock split that happened just a few weeks ago on January 2nd, the smart money was looking at the underlying clinical evidence that made this VA contract possible. If you're managing your own portfolio through Interactive Brokers Trading or using Schwab Intelligent Portfolios, you're likely looking for the why behind these 240% moves. Usually, when a stock jumps this much, people assume it's a pump and dump or a short squeeze. And while there is certainly some short covering happening here, given that short interest was significant leading into the reverse split, the core of this move is rooted in institutional validation. When a government body like the VA signs off on a diagnostic tool, it acts as a green light for private insurers who have been sitting on the sidelines. Let's look at the trading volume for a moment, because that is where the truth usually hides. On a typical day, PAVmed might see a few thousand shares change hands, especially after the split reduced the float so drastically. Today, we are seeing millions of shares traded within the first few hours. This tells us that institutional desks at Fidelity Brokerage and Interactive Brokers platform are likely repositioning. When you see volume that is 10 or 20 times the daily average alongside a 240% price increase, it suggests that the expectation of a struggling microcap has been completely replaced by the reality of a commercial stage powerhouse. The contrarian take here is that most people believe the move is over once a stock hits a triple-digit percentage gain in a single session. However, if you look at the historical precedents for medtech companies that secure large government contracts, this is often just the beginning of a multi-month trend as the actual revenue begins to show up on the quarterly reports. For those of you watching this on the SoFi trading platform or checking your Fidelity IRAs, it's worth asking, is this a one-day wonder, or is the market finally pricing in the long-term value of EsoGuard technology? Comment below how many shares of PAVmed you currently hold, or if you think this VA contract is the tipping point for the stock to return to its previous all-time highs. To really get a handle on what's happening, we need to talk about the business model and what PAVmed actually does. They operate as a multi-product medical technology incubator. Their primary value driver right now is Lucid Diagnostics, but they also have Verisense Health and other subsidiaries in the pipeline. Lucid's EsoGuard is a non-invasive test designed to detect esophageal pre-cancer. Before this, the only real way to check for these issues was through a full endoscopy, which is invasive, expensive, and requires sedation. EsoGuard uses a small balloon-like device called EsoCheck to collect cells from the esophagus in a 5-minute office visit. The market's previous skepticism was based on the reimbursement wall. In the world of online investing, many people forget that a medical device can be revolutionary and still fail if insurance companies refuse to pay for it. PAVmed and Lucid spent the better part of 2024 and 2025 fighting for Medicare coverage and building a sales force. The reality we are seeing today is that they finally cracked the code. By getting the VA contract, they've bypassed the traditional slow roll of private insurance negotiations. This is why the stock is behaving more like a high-growth tech play than a sleepy medical device company. It's also important to note the macroeconomic pressures that have been weighing on this sector. For the last 2 years, small-cap healthcare has been decimated by high interest rates. When capital is expensive, investors flee to safe havens like Apple stock or Nvidia stock. This left companies like PAVmed with very little breathing room, forcing them into the reverse split we saw earlier this month. But as the interest rate environment begins to shift in 2026, capital is starting to rotate back into risk-on assets. Investors using investing sites to screen for undervalued biotech and medtech are finding that names like PAVM have been compressed so far that any positive news creates an explosive reaction. If you're an online investment enthusiast, you've likely seen the headlines about the 1-for-30 split. Usually, a reverse split is a sign of desperation, a way to stay above the $1 minimum bid requirement for Nasdaq. The expectation was that the stock would continue to bleed out after the split, which is a common pattern, but the reality here is that the split actually cleaned up the capital structure, making the stock more attractive to institutional investors who are prohibited from buying penny stocks. By trading at $21.06, PAVmed is now firmly in the territory where Fidelity Wealth Management or Fidelity Mutual Funds might actually be able to take a position. Let's break down the technicals for a second. With the stock up 240% today, the Relative Strength Index, or RSI, is obviously in overbought territory. On most self-investing platforms, you'll see a bright red warning that the stock is overextended. In a normal market, you'd expect a pullback to the VWAP or a retest of the opening gap. However, when you have a fundamental catalyst of this magnitude, RSI indicators can stay overbought for days or even weeks as the market tries to find the new fair value. For those using Robinhood fractional shares to build a position, the volatility can be stomach-turning. 1 minute the stock is at $21, the next it's at $24, and then it dips back to $19. This is the price discovery phase. The market is trying to figure out if a company with a VA contract and a cleared path to revenue is worth $200 million, $500 million, or over $1 billion. Given that the market cap was sitting at a tiny $6 million just yesterday, even after this 240% move, the valuation is still remarkably low compared to the total addressable market for esophageal cancer screening. We should also look at the subsidiary Verisense Health. While Lucid is the star today, Verisense is working on digital health and remote patient monitoring tools. They recently relaunched the development of an implantable physiological monitor. This is significant because it shows that PAVmed isn't a one-trick pony. If you are doing online investing through SoFi Active Investing or Fidelity Trading, you want to see a pipeline of products, not just a single diagnostic test. The long-term vision of CEO Lishan Aklog is to create a diversified medical technology company that can scale multiple products through a shared corporate infrastructure. This shared services model is designed to reduce the burn rate, which has been the primary concern for anyone holding PAVmed in an individual brokerage account. The risks, of course, are still present. Even with the VA contract, PAVmed will likely need more capital to fully scale their operations. We saw a $125 million shelf registration filed late last year, which means dilution is always a possibility. Investors using Robinhood app or Fidelity mobile app should be aware that management might use this massive price surge to raise cash. In the world of self-investing, you have to be prepared for the fact that a 240% gain can be followed by an equity offering that clips the wings of the rally. However, if that capital is used to accelerate the VA rollout, it might be a net positive in the long run. Now let's pivot to the future outlook. As we move through 2026, the key milestones for PAVmed will be the actual revenue numbers from the VA contract and the potential for a full Medicare local coverage determination for EsoGuard. If they get the LCD, the stock could potentially see another move of this magnitude. The expectation is that government bureaucracy will move slowly, but the reality of the unanimous expert consensus we saw in late 2025 suggests that the medical community is tired of waiting for better